The stock market right now is down pretty bad. So in this video, we're going to be talking about what is expected with the economy over the next year, something that JPMorgan CEO just said that could be very effective on the stock market, and it's already seeming to have that effect as we can see how stocks are performing today on this Friday, January 14th. And let's just get into it. So before I go any further, I'll ask if you enjoy dividend stocks and dividend investing, you subscribe to this channel. And if you like growth stocks, you check out my other channel called Investing Alpha. It's more about growth stocks and kind of riskier things. I just want to give that type of content out there. This channel that you're watching this video on right now is more for dividend stocks and value investing. And check out the Discord. Link is in the description below. It is also in the comment section, the pinned comment. It's 100% free right now. Make sure to check it out and join real quick. But enough of that talk. Let's get into this video. So the SPY, the S&P 500, this past week is only down 0.58%. And it's because we had a massive run up and we got all the way up to about 2% this week alone, which is really good for the SPY, up 2% in a single week. But then from that up 2%, we are now down 0.56% over the past week. So it's been a little bit of a crazy week. Now let's go ahead and talk about what JPMorgan CEO said. So JPMorgan CEO Jamie Dimon says there could be 6 or 7 interest rate hikes in the next year. So let's just read the highlighted parts. I think it's important that we talk about these. The CEO of JPMorgan predicted on Friday that rising inflation could prompt the Federal Reserve to raise short-term borrowing costs as many as 6 or 7 times, doubling down on his earlier bet that the currently anticipated 3 to 4 increases are likely a low estimate of what investors can expect. So he was expecting 3 or 4 increases, and now he's expecting 6 or 7. Now you might be like, what's the interest rate that they could raise this by? And we'll get into that at the end of this, but it's about 2%. So that does not mean we won't have growth. It says right here, this whole notion that it's somehow going to be sweet and gentle and no one is ever going to be surprised, I think is a mistake. But that does not mean we won't have growth. So he's still expecting growth in the market and growth in the company as a whole. But this would mean potential short-term rates could be up 2% by the end of this year. And if it's that much, the market is going to have a lot of trouble across the board just because the last time we did this, it got beat up, said Ellison, who criticized Dimon's remarks on rate hikes, calling it an irresponsible comment. Now, Ellison is a large cap financial fund portfolio manager. So these are two pretty knowledgeable financial markets people going at it. And he said that this is an irresponsible comment because of the impact that that comment can have on the markets. And it seems like, well, it's already having those effects. We can see JP Morgan as on its own is down 6.29% today. That's pretty big. Okay. Over the past week, they were doing pretty flat, kind of uptrending a little bit, and then they just plummeted after this comment. So that's something to keep in mind. I am personally invested in JP Morgan, and I don't really plan on selling it. And here's another reason that keeps me strongly invested in my financial stocks. The company, like other U.S. lenders, would benefit from interest rate hikes this year. And that's why I talked about, I think that a lot of these financial stocks have the potential to perform very well over the next year if interest rates raise. So they're expecting about 25-point increases each time. So pretty much 0.25%, and it could happen 6 or 7 times in the next year, which would be pretty interesting to see, and it would most likely affect these growth stocks even more. But let's go ahead and talk about my portfolio, how it performed this week. So as you can see, this past week, I am down 1.35%. We were doing all right. We were passing that $11,000 mark, and then we fell down to $10,950 and losing $150 overall. The past day, I'm down $100, which is 0.92%. Now, if we go into just my overall holdings, Microsoft has been performing terribly right now, but I did buy some Microsoft. We'll look into my activity this week. We can see some of my top performers being like Toronto Dominion Bank and Alger Group. I have strong conviction on TD Bank, especially with the way that the economy is looking to perform over the next year. SPHD performing really well, and that is mainly because I've been holding this one for a few years now. We have Starbucks, who is down pretty bad. A lot of these are flat. Some of these like Lowe's, very, very flat. Charles Schwab performing incredibly, up 15% unrealized gains. Alpine Property up 6%. Now, if we go to JP Morgan, I'm down 4%. Vici, I'm down 3.5%. But a lot of these not a lot of these, all of these I have high conviction in. Costco, I still strongly believe in. I only put in $50 into this company, and it's down to $45.20. So I'll probably buy the dip sometime coming soon. I'm looking to deploy some cash into my portfolio at the current time, especially with just the ways that the markets are looking right now. Now, if we go into my portfolio activity this week, we can see this week started on January 10th. Okay, so from January 10th, I got a dividend from Ultra Group for $11.08. It's the only dividend I got this week, and I made 8 buys for $350. I individually bought $100 of Microsoft because I thought it was a good buy, and then I just put in a $250 buy order for the rest of my portfolio, and it spread that out into IGV, Broadcom, Nvidia, Starbucks, Toronto Dominion, Apple, and Visa. So I think that was some pretty good buys that I made. I wanted to just buy while the market was still kind of falling. I thought it was important to buy the dip, I guess you could say. And this was all on January 10th, while the SPY was kind of around these levels. So I think I got in at pretty good prices. Even if it continues to fall, I'm not going to complain because I don't think there's really anything for me to complain about getting prices like that. Now let's go ahead and talk about tracking my dividends. My current yield on cost is about 3.46% with an average dividend yield of 3.35%. However, I do believe that my portfolio's yield on cost last week was about 3.55%. And it's a mix of things. It's me buying more into lower yielding stocks, and kind of a lot of my stocks not performing too well right now. I mean, we can see right here, if we go to the actual activity that it's going to negatively affect my portfolio and the yield on cost, as my stocks are down 1.3%. But I'm not concerned about that by any means. I'm in there for the long term. And remember, the best investors are the non-emotional investors. So don't let emotions get into the market. If the stock market crashed 50% in a single day, I mean, it wouldn't be super fun or anything, but I wouldn't be sitting there freaking out because I know I have conviction in these companies. I'm not investing in numbers. I'm investing in companies, and that's what I'm really looking for. But everybody, that's going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to my Investing Alpha Growth Stock channel, and we have a huge surprise coming in there. So make sure to join the Discord server before things kind of get exclusive, I guess you could say, and make sure to check out this channel, Investors Intellect, if you like dividend stocks and dividend investing, all that good stuff. Thank you so much for the support you guys have given the channel and all the good things. And check out M1 Finance if you haven't already. You can look at my portfolio, see all the stocks I'm invested in. It's 100% free to go do that. And if you haven't opened an account, check out the link in the description or the comment down below. You can sign up, deposit $100, and you'll get a free $50. You could take that money out. It's free $50, 50% ROI just like that. So again, thank you so much, and I will see you at the next video.